Welcome, and thank you everyone for joining us today. This is Jason Dahl, and I am a certified financial planner with AFS. With me today are Alp Adebeck and Dennis Elias, all remotely still, and we will be your entertainment for the next 60 minutes or so as we discuss cryptocurrencies. Before we get started, just a quick reminder that we are recording this session, and we will be sending that recording out either tomorrow or Monday. I would be remiss if I didn't give a big shout out to Natalie Adebeck on our team, who put a ton of work in preparation for this presentation. So thank you to Natalie. But also she will be the one, I think you'll get the email from her with the recording. So be on the lookout for that. We also want to encourage folks to ask questions at any time during today's session. You can ask a question by typing it into the Q&A or chat boxes at the bottom of your screen. I think it's at the bottom for most of you, but you may move it around. It might be at the top or left or right of your screen, but there should be a couple little chat boxes. And I also want to encourage you to directly follow up with us after this workshop if you have further questions or would like to schedule a time to review a few things over Zoom or the phone. We truly do love what we do, and the best part of what we do is connecting with people and helping them solve personal financial planning puzzles. So please don't hesitate to reach out. All right, so let's get into the good stuff here, the disclaimers. So it's important to note that this is for educational purposes only. This presentation is not meant to be an endorsement or recommendation for or against buying, selling, or shorting any cryptocurrencies, tokens, NFTs, or so on. I'll say that the traditional finance world, as well as the regulators, as we'll talk a little bit about later, are, let's just say, not yet with the times. And as a result, currently, for example, our E&O insurance has a specific carve-out that says we are not covered for investment advice related to anything crypto. Now, we do expect this to change. We look forward to that day, but don't know exactly when that's going to happen yet. So hopefully that addresses one of the questions I know we got ahead of time related to that. I also want to acknowledge that this topic is way more nuanced and complex than we could ever hope to cover in just an hour. We have put together a great presentation that hits on the key high points while trying to strike a balance between the complicated and the relatable. And I also want to note that we primarily will reference Bitcoin throughout because that is the most well-known cryptocurrency, but we do cover and will discuss other currencies, coins, tokens, networks, and so on. And we really are just scratching the surface, and we'll do our best to keep today's presentation moving along at a good pace without going too far down any number of potential rabbit holes. Related to questions, we did get a number of questions ahead of time. Thank you so much for sending those. As we were reviewing those, I am confident that we are going to cover those over the natural course of today's presentation. But as I said before, if any of you think that maybe we didn't touch on what you were hoping or were asking about, don't hesitate to type it in again or follow up with us after the fact. Yeah. All right. So let's kind of talk a little bit of the history, timeline, if you will. So in the late 1970s and early 80s, really the technological groundwork related to cryptography and the first digital currency were laid. However, not much happened with that until 2008, when someone or someones going by the name Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. And now Satoshi's breakthrough established the ability to create decentralized scarcity online, right? So that's really kind of the crux of what we're diving into today. And this really is the pivotal moment that launched the world onto Bitcoin and crypto. In 2010, the first real-world payment using crypto was made to buy something tangible. Now, I think it's probably safe to say that this is the record for the most expensive pizza purchase, or at least in terms of the 2021 equivalent value of roughly $500 million. You can also see here that kind of some of the price moves of Bitcoin from its launch in 2010 when it started trading through 2017, which marks kind of the peak of the first Bitcoin craze, or dare I say bubble. In 2018, this is sometimes referred to in the community of crypto as the crypto winter due to the dramatic drop in price of Bitcoin and pretty much every other cryptocurrency that was trading at the time. By 2020 and well into this year, you can see the dramatic price move up. Now, also of note, earlier this year, El Salvador became the first country to recognize Bitcoin as legal tender. So this is important as it is a marker of sorts, really around the question that often is asked, well, what is Bitcoin for, right? Or why is it worth so much, even though there isn't anything tangible backing it? Now, one of the things we often talk about in the office is there is one way of measuring the value of Bitcoin, as flawed as it may be. It's not perfect, but that's what we call the adoption rate. So in other words, think of it as if more and more people, businesses, countries, like El Salvador in this case, believe that it's real and has value, well then, and then they adopt it in their normal practices, well that helps create value seemingly out of nothing. All right, so let's kind of get into just sort of the quick background and realizing, hey, we're painting with a broad brush here, but Bitcoin really was designed to create a digital currency through, I'll just call it advanced cryptography. But unlike traditional currencies, Bitcoin operates without central authority or banks and is not backed by any government. And now, while it has taken over a decade, there finally does seem to be some consensus on what Bitcoin is, and it's often kind of referred to as digital gold. And we're going to kind of use that reference throughout today, or that analogy, if you will. And so from an investment perspective, Bitcoin is often framed as a safe haven asset whose primary use case is simply holding it, right? Similar to gold. I got to admit, I feel like practically every day there is some legendary investor on TV saying that Bitcoin is an emerging store of value which, like gold, can play an important role in a diversified portfolio. And I guess, right, they do have a point, since a nearly $1 trillion asset has been memed into existence, despite being backed by nothing. The other side of that coin, of course, are those who talk about how it's not used in day-to-day transactions, or how it's too slow or too volatile to be a useful currency. I got to say, it is kind of difficult to consider something as volatile as Bitcoin as a quote-unquote safe haven. There is nothing fundamentally underpinning the value of Bitcoin other than the belief among some people that space on the network is valuable. And the network, or blockchain, that we're going to talk about more here in a moment, think of it as like a big decentralized spreadsheet, and a quote-unquote coin represents some space on that spreadsheet or on that blockchain. All right, so just a little sort of the why crypto.
And Jason, just to stop you real quick, we did get a question. So someone asked, what explains the price collapse in 2018? And I think that ties back a little into the volatility of it all. And as Jason said, how it was memed into existence. And it really is, it was a period of a bear market, I'll say. And Jason mentioned the Bitcoin winter. So very just at times unexplainable drops in the market of Bitcoin. There's not really, I'll say, anything for sure that happened in particular, but at times the hype just dies out a little bit. There's also a couple of different events that happen on the timeline with regards to, we won't get into this today, but Bitcoin halving. So
and I know Alp's going to really kind of dive in a little bit more about kind of the volatility, the history, the trading, kind of as an investment here in a moment. But Alp, I don't know if you want to kind of throw in anything.
Well, I'll just say back then it was also a much smaller market with a lot less participants. And so it's easier to move the price back then either direction very quickly. So if a few players decided to back out of it, then it would actually take it down. Today, it's just more widely spread. We're still going to have, just like in any asset class, I'll say major movements. But back then it didn't surprise me. And you also have to look at charts where it basically went vertical for a little while. So, you know, the reason it went to the 19K top and then backed off is it went straight up at one point. And typically when that happens, you always see reversal.
Yeah, yeah, and you know, I think some of it sort of just comes down to the novelty of it. There was some real excitement. Wow, this is cool. Let's put some money in it. Lots of folks trying to drive it up. And then there were some folks in that area that said, wow, this is amazing. I kind of never thought it would get this high. So they sold out, right, to kind of take some of those gains, while there were still sort of some people, you know, kind of the classic left with the bag. And some of those people held on and are happy they've held on, right? But there are, you know, a lot of different factors kind of played into it. But I think a big piece of it, it was just so new, so small, and really fluid at the time. So kind of thinking about just sort of crypto in general, and I like to kind of frame it as kind of, it follows sort of one of two paths or use cases. The first being kind of something to buy and hold, like Bitcoin, right? And we're going to talk more about that kind of as an investment. But second, thinking of it as kind of a technology to actually do something, right? And so the good example there is like Ethereum, okay? And so Ethereum is really kind of based on the belief that blockchain could do something much more than just be a money database, right? And kind of the vision for Ethereum includes serving as a repository of identities, or a decentralized file storage system, or various financial derivatives, right? And there are many other things that I can't even understand or imagine, right? That sort of folks are kind of envisioning. I'll say that Ethereum and kind of that second path, you know, not just Ethereum, but just using that as an example, right? Kind of that second use case is kind of the prime example of what has so many quote unquote new people excited about crypto. And that's primarily due to kind of the possibilities within decentralized financial services, right, or DeFi, and that's a term that you probably may have heard about, or also in the world of non-fungible tokens, right, or NFTs, right. So that's NFTs are really more related to kind of that Ethereum model, right, where it's a network, a system to actually do something with the technology, as opposed to kind of Bitcoin, where it's just the currency, right. So kind of another way to distinguish the two paths, just to kind of put a final point on that, is kind of think of Bitcoin simply kind of as a cryptocurrency, right, sort of in its purest, simplest form, or better yet, as we like to kind of think of it, digital gold, because it's not, you know, a currency analogy isn't great, as we'll talk a little bit more later. But think of Ethereum as kind of being both a cryptocurrency and a token, right? And that token is kind of like the money that is only redeemable within a specific network. In this case, the Ethereum network, right? One analogy that I've kind of read about is the Chuck E. Cheese tokens, right? Like, you can only use it within that environment, right? It has some value, but it can only be used within the Chuck E. Cheese environment. So I just want to kind of note a couple of the questions that came in. I know we did have a question specifically about NFTs, or non-fungible tokens, and while we are not experts, right, in kind of the value or trading of NFTs, and I don't want to take away any of your thunder, Alp, if you kind of feel like you're going to cover that in kind of later, so we don't specifically kind of get into NFTs, but just kind of the question here. Let me just reference that question to make sure we address it. I always appreciate that. Right, is kind of, how do you assess the prospects for the NFT market, right? Kind of going forward, you know, to be a marketable, must it be an NFT tied to an already established brand name, such as a prominent professional athlete or artist, and or paired with the sale of a physical product? So this is somebody who clearly kind of understands kind of what's going on in the NFT world. And I'll just sort of generally say, one, we do believe that there's the real world application and long-term viability and value in the use of the NFT technology, right? And kind of taking, whether it be a piece of kind of digital art, or like the Top Shots world and, you know, sort of sports and in NBA. So, you know, sort of you own a highlight, right? So we do think that there is something real there. But in terms of kind of the future value, yeah, I do think, right, you could take a flyer, right? There'd be an unknown artist that you're saying, hey, I'm just taking a total chance here, right? It could be worth absolutely nothing, or who knows, maybe this artist turns out to be something, right? Versus kind of the traditional route of, oh, hey, this is of a known professional athlete or known artist, right? So I think kind of some of the traditional investment thesis applies in this world as well. I don't want to kind of belabor that too much longer because I know we have a lot to cover. So before I turn it over to Dennis to kind of lead us on blockchain, let me see if we had other questions. Okay, yes. So asked about what symbol Bitcoin is trading on. We are gonna address that. We'll have that here in a few moments. I'm gonna pause on that. So yeah, so here I'm gonna let Dennis here walk us through a few things.
All right, so we'd like to dive in a little bit on how exactly crypto works, specifically Bitcoin as well, some of the comparisons between crypto and traditional currencies, and then just explaining some of the background information, how you get crypto, and what are the different types of crypto out there. But really, I'll say one of the game changers of crypto that has made it such a big deal is this blockchain technology, which many of you may have heard of, which is essentially a system of recording information in a way that makes it difficult or impossible to change, hack, or cheat the system. So pretty valuable tool if you're trying to make transactions. It's essentially a digital ledger of transactions that's duplicated, and it's distributed across the entire network of computers that are on that blockchain. So we can think of it kind of like a decentralized spreadsheet, and any coin that you own, whether it be a Bitcoin or another type of coin, it represents a space on that ledger. So it's recorded out there, somebody can see it, and they can see where it's moving. And really the core idea of this blockchain community is that anyone anywhere in the world, such as yourself, can go onto that blockchain. And in the case of Bitcoin, it would be running a Bitcoin node, which then downloads and monitors that entire blockchain network. So any individual can go in there and verify what's going on, what transactions have been made, and it's almost like a peer-to-peer cross-check of everything that's happening. So that's really one of the more valuable tools of this technology. And I will say it does come with a downside. While it's a very novel concept, it does have a limit to how many transactions can actually occur within the network. And that's known as what's called a block size. So this limited transaction capacity is the trade-off for the decentralization from the governments that cryptocurrencies take. And that is also one of the reasons why the adoptability of it as a currency is also hampered a little bit, because it can't be traded easily as you would with a dollar or your credit card or anything of that nature. Yeah. So, yeah. Yeah. So, and I think that while it is a novel concept, Jason, if we go here to the next slide, I think that,
sorry about that.
Yeah, I think that one of the big concerns that we have is the concept in particular of making something out of nothing when it comes to cryptocurrencies. This kind of leads back to the question of the price collapse in 2018. While Bitcoin was made to become a currency, when you think about it, it doesn't really follow all the rules and regulations of a currency, which we'll get into here in a little bit. And it's really been driven by what's called the meme coin craze. Specifically, the biggest meme coin out there today is what's called Dogecoin, for any of you that have heard about it. But it really is just almost fictitious, and people betting on that it'll just continue going up because your neighbor will pay $10 more for that Bitcoin, if that makes sense. Very similar to what was called the tulip craze of the 1700s, where essentially people were buying tulips for an exorbitant amount of money just because the next person they thought would continue buying those tulips for more money. Eventually that market completely crashed, which you could argue is similar to the case in 2018, because the adoption rate just didn't continue. Now, we think that if the adoption rate can continue, and that if the blockchain downsides can kind of be straightened out, or if maybe cryptocurrency just becomes kind of like a process that you use to make an NFT, like Jason was saying, then it can become something. But at the current time, there are many coins out there that are really just making something out of nothing. And in particular with Bitcoin, we think that the better comparison to make, and also kind of to the making something out of nothing, is gold. When you think of gold, it's a mineral of the earth. It's not really used for much besides holding it. You may wear jewelry, of course, but they all can be basically mined anywhere in the world. They are both very energy intensive and difficult to mine, and there's a limited supply of them. So that limited supply always makes things more valuable. Bitcoin is absolute. There's a maximum of 21 million coins that can be eventually mined, and we'll get into that a little bit here in the next couple slides. But that is also one of the big comparisons to make to gold. And I'll say possibly one of the big factors that's making Bitcoin such a big craze is the mystical origin. And gold, all throughout history, has had many mystical origins, stories, and
across many cultures, right?
Yeah, across many cultures. And when you think of Bitcoin, if I have a piece of gold jewelry that's like really nice, it's kind of cool to talk to somebody about it, where I got it, etc. If I have a Bitcoin, it's kind of cool to talk to my friends that I have a Bitcoin. So we think that comparing it to a commodity such as gold is potentially a better comparison. But overall, this is one thing that we kind of continue to monitor, and we think that once there is something that becomes something, then it'll really become a more logical market.
And I know I kind of glossed over it a little bit with the, this Satoshi story, but that kind of builds into that mystical origins. No one really knows who Satoshi Nakamoto is. Is it one person? Is it multiple people? Is that person still alive? It kind of builds into that.
Yeah. So leading into the conversation of crypto versus traditional currencies. So when you think over the history of humanity, money has really taken on many forms, from large stone discs called rhinestones to gold currency to the paper bills that we use today. And you could even argue that paper bills are becoming close to obsolete, because I personally never carry any paper bills with me and just use my credit card and bank card. So traditionally, it's taken on many forms, but there are specific characteristics that are generally pegged to a currency. And these are the adoption rate, so really social acceptance. When you think about a $20 bill, if I give you a $20 bill today, you're going to accept that that $20 bill has some value to you. The next characteristic is the store of value. If I give you that $20 today, you'll acknowledge that $20 today will be $20 tomorrow.
We'll talk inflation on another call. But.
Yes. The ready use of it by other members of society. If I give you $20 today, you know that you'll be able to use it anywhere in America to buy really whatever you'd like. That's under $20, of course. And most importantly is that currency is a unit that things can be priced in within a society. So if I give you that $20, you can use it somewhere else, because Walmart will be using dollars. Apple will be using dollars. So all of these things are what create a currency. Now, when we think of crypto, whether it be Bitcoin or any other coin out there competing with them, if we look back at those things, adoption rate, you could argue that some big firms are adopting it. Store of value, it's worth something, so potentially there. It fluctuates an extreme amount, so I wouldn't say that it's a definitive value, so that's one of the downsides. Ready use by other members of society. Not really. If I give you a Bitcoin today, you won't really be able to use it in many places. And then to the most important point of it being priced in within a society, if I give you a Bitcoin today, you're not going to be able to use it in many places. So that's really the comparison between crypto and traditional currencies. While there are some characteristics, not all of them are there yet. So I think that that's kind of those 4 points that I made there are a great example of what are the determinants and what's really stopping crypto from becoming a currency. And I think, as I said before, a better comparison would be gold, because when you think of those 4 characteristics.
And Dennis, I'll actually add, like, on the adoption rate, one really good comparison is, think of when the electric vehicle craze started, and it's not really craze, we know it's just going to be the new power of cars, but when it first came out many years ago, there was very few Tesla charging stations. And so the knock on it was, well, it's great for driving around locally, so in a sense the currency is great if you're around people that will accept the currency, but when you go out to the more rural areas and there are no charging stations, it's impossible to drive that Tesla if you run out of power.
Mm-hmm, mm-hmm.
Yep, yep.
Yeah. Yeah, so I mean, the concept overall is great, and it would be, I think it's almost inevitable that there will be some kind of digital currency in the future. It's just, what will that currency be?
Yeah, and yeah, how stable, how many people will use it, how easy will it be to use, right? And but recognizing, and we made this point earlier, I think Dennis addressed it, but I think it's important to remember that kind of in its current form, sort of by definition, right, the trade-off between having it kind of be sort of perfect in some ways, right, that you can't sort of falsify it, right, it's decentralized, there you can track it, anyone in the world can, you know, download the Bitcoin node and know, like, okay, who owns which coin and when the transactions are made, is that it's kind of slow and clunky, right? The system, sort of that. So that's kind of an ongoing debate within sort of the community, if you will, as to, hey, do we want this to be easier, right, to move and cheaper to transact? But there's some trade-offs for that. So Dennis is going to continue on. I just want to note that we did have some questions on mining, which Dennis is going to get into here. We had some questions on, are we going to talk about other coins, right, other than crypto, which we're also going to cover here in just a moment. And then I know we had several questions around just sort of the investment thesis, if you will, right? Like, sort of, does this make sense for a retiree? What if I just want to dabble in it? What, right? And so we had a number of questions on that front, which we're going to really dive into as well. So thank you.
And we did just get into questions. So somebody who has coins, they're trying to purchase other coins, but it says that they're not tradable due to SEC regulations, or they need a new wallet. So what happens to the investment in the future if the SEC doesn't deem it as the coin or not tradable in a wallet? Would they still have access to the money? Is that a risk they have to bear? So we'll say the regulations, and we'll talk about the regulations a little bit more, but they are not definitive yet. And so we would just be very cautious with whatever says that, because you never know what will happen, and it's potential that it could go down to zero and lose value. So, and
Dennis, I'll add on that particular question, though, a lot of it really is about the particular bank or wallet somebody's using, not currently like setting up whatever they have to in order to hold a specific currency. So when I talk about the banks later, we'll talk about some of those issues where, you know, at times it's just impossible to buy it within a certain bank. So I think that's one of the problems there.
Yeah, so like Coinbase, for example, they have a lot of the smaller coins that they actually won't trade just because they're not really deemed as legitimate coins yet. So,
you know, and then there's a you know, there's the ongoing kind of debate of, okay, once you buy a coin, should I keep it on the digital bank, right, or the exchange, or should I immediately kind of download it onto my local wallet so that's not connected to the internet, so you don't sort of run that counterparty risk, right? There's a number of potential, you know, sort of issues and risks that are all kind of being played out right now.
Yep. And another question just on the NFTs. So how can one minimize the many fees attached to minting and selling NFTs?
I'm going to say that's basically an impossible question for us
yeah,
right now, because that part is still on the, I'll call it, very new stage, right? Nobody really knows how all this is going to work out down the road. So I think
I don't think any of the three of us have ever actually minted or tokenized anything. So apologize that that's probably a little out of our purview.
Yep.
All right.
All right, so let's move on to mining. So similar to gold, we said, Bitcoin is also mined, not in the ground, but through computers. So mining is essentially a process that creates cryptocurrencies like Bitcoin, and then they enter into circulation. So you essentially can earn cryptocurrency without having to put any money down for it. While it is free, it is also very painstaking, time-consuming, and very energy-consuming as well. And the process that it takes is essentially, it's like cracking a puzzle by running algorithms or complex computations. And once these puzzles are solved, the miner is then rewarded with the creation of the coin that they may then keep. So the person must solve the puzzle first, of course, so it's not always guaranteed. And really, to the point of energy efficiency, the probability of solving a puzzle is actually directly correlated with the total mining power that you have. So currently, to mine a Bitcoin, it actually takes 110 terawatt hours per year. So that is the equivalent of 0.55% of global electricity production, which then translated into something that makes sense is the annual energy draw of small countries like Malaysia or Sweden. So pretty interesting to put it into perspective. And as you can see here, the cost of mining one Bitcoin is $7,000 to $10,000, and most of that comes from the energy consumption. And I'll say that this is not within our wheelhouse. We don't know how to mine or run the algorithms. It is very complex. But
you're
the
not
big
doing
advantage,
you're not doing it by hand, is safe to say, right?
Yeah.
There's a lot of hamsters in the wheel.
Yeah. And to kind of talk about gold a little bit in the gold rush, when you think about it, it's really like the entrepreneurial types that see mining. It's kind of like mining for pennies from heaven. Very similar to the California gold prospectors that went out to California in the past and mined for gold, and many of them found nothing. So
spent hours and hours.
Hard to do.
Weeks. Yep, without a doubt.
All right.
Yep. Yeah. So altcoins. So altcoins are all the coins that are not Bitcoin. So that makes it a pretty easy category when thinking about it. But when you dig in deep, there are more than 9,000 cryptocurrencies.
And counting.
And counting. So it is an extremely extensive market out there. Some of them are looking to compete with Bitcoin as a currency. Some of them are looking to compete with Ethereum as creating kind of like a service or a product. And others are really just made for fun and kind of like the Dogecoin meme coin that we call, which was literally just made as a joke and now has an extremely large market that's been even touted by Elon Musk. So we're just going to touch on this very quickly, but just so you know, that is what altcoins are, and trying to pick which of these coins will be successful, I'll say, is impossible.
Is gambling.
Yeah, it's gambling. So yeah, but that they are out there, and Ethereum is also considered an altcoin, and we'll say that it is one of the more legitimate coins, but there are definitely riskier picks out there. And stablecoins, another type. So there's Bitcoin, altcoin, stablecoin. Stablecoin is actually what, people that are proponents of a currency would like Bitcoin to become. It's something that holds a stable value. You can trade easily. It's free of cost at many times. And it's overall just ease of use. And it kind of hits on all the 4 points that I discussed of what make up a currency, on particularly today, just on the crypto market, because you can't buy stable coins anywhere else. But the difference here is that these are actually pegged to the market value of some external asset, like the US dollar, commodities like gold, and some are actually also pegged to other cryptocurrencies, which I'll say those are probably not very stable. But that is essentially the take on stablecoins, is that they really are what many cryptocurrencies want to become, but they are stable because they are pegged to an outside asset. They aren't yet kind of adopted to what they actually stand for, you could say. One of the big ones out there is Tether, and I think it's actually one of the top 10 coins today, but there's also a little bit of speculation out there on the pegging to the whatever asset it's pegged to and whether it's being done correctly. So just something to know and be on the lookout for. Yep.
All right.
So the question of whether it's a investable asset class, for those that like doing a lot of reading on the subject, there was a great, they called it a special report put out by Morgan Stanley. It's titled "The Case for Cryptocurrency as an Investable Asset Class in a Diversified Portfolio." It was written published March 17th, 2021. I think that gives a really good summary on this subject and get a little history of the coins as it is. And I'm going to read from it. It says, on the one hand, this is Morgan Stanley talking, our recognition of cryptocurrency as a likely permanent investment category is an acknowledgement of its potential to power decentralized, tamper-resistant, anonymous transactions on blockchains leveraged for applications. This is undeniably exciting. But they write, on the other hand, cryptocurrency represents a radical new invention, lacking a known sponsor, a centralized standard setting body, or an actual physical incarnation that continues to search for the killer app or best applications, and could ultimately prove challenging to sovereign governments, climate advocates, and market regulators. So they're basically saying that this market has grown substantially. There's a lot of really nice features on it. They're saying it's likely going to become a permanent investment category. It's fascinating. Like gold, most people don't realize, didn't really become popular as an investment category until the 80s. And it's not really popular today. There's people that are completely gold bugs and they believe in it because they think that gold will always retain its value while currencies potentially can basically inflate themselves out. So fascinating article by Morgan Stanley. They're completely in on it for now, saying, yes, this is basically, or I'll say likely is, an investable asset class. On the next slide. So how does it fit into portfolios? They're basically saying you have to look at it right now as a very speculative investment for qualified investors. So they're saying to also look at it basically akin to how one might approach venture capital investing. And if if you understand how venture capital investing works, like the success rate in venture capital investing is really, really low, where they might seed 20 different companies with the hopes that one or two might turn out to be profitable companies. And many of them, they just close up shop saying, you know, this didn't turn out to be a good thesis, and so we're just shutting it down. And so they're saying keep it basically as a speculative part of your portfolio, and that generally means 2 to 5% maximum in a portfolio. And I will tell you that that is completely contrary to how the younger investors are investing in it today. When they're saying how does it fit into their portfolio, they're generally just going all in one currency and taking their life savings and investing in it. And you'll hear the success stories of the people that have made money investing in those currencies because they will actually publish it in some form. You generally don't hear about the people that have bought the currencies and gotten wiped out. So, you know, I think it's really good to look at it as a speculative part of your portfolio if you're considering adding it in. And on the subject of like the currencies themselves, I personally have zero doubt that all major current currencies, I'll call it the fiat currencies, like the US dollar, the pound, the euro, et cetera, I'm confident down the road they're going to be all in a digital format, and it just makes so much sense. Where, you know, my guess is 25 years down the road, you could see little kids looking at some coins on a table somewhere and say, "Tell me again what those were and what were they for?" Where, you know, everybody these days, as Dennis mentioned, he just uses nothing but a credit card or a debit card. I know I probably go to an ATM about once a month, and I probably go to a bank about every 5 or 6 months these days. And so there's no doubt in my mind this will evolve. The currencies around the world for all economies will switch to some type of digital format. And if they can do it in a way that basically makes it difficult to counterfeit, that in itself will be fascinating. Because as you know, there's a lot of counterfeiting going on with pretty much all the major currencies. On the subject of trading it or holding it, I would tell you very difficult question to really give you any specific answer on, because I think the market has changed considerably over the years. Like the average hold time for a stock literally is like minutes now compared to when you factor in all the trading that gets done compared to the old days where it might have been 9 months being the average hold time for something. So I think there's traders and I think there's long-term holders. The people that have made the most money have been the ones that bought Bitcoin a long time ago, bought Ethereum a long time ago, and have watched it grow in their portfolios. But I'm not doubting that the timeline has become shorter at times as we've seen all these new currencies. And if one gets that meme status, you can see somebody that maybe held something for a couple of weeks and it's, you know, gone from a $5,000 investment to, you know, $1 million investment. And there was a guy that became famous. I put in, I think, quite a few dollars into Dogecoin, and I think within 39 days or something, he became a Dogecoin millionaire. So that generally doesn't make sense, but that shows you what is happening right now.
And Al, just kind of on this subject of trading, right? And one of the risks that we as a team have talked about is kind of going back to the technology itself, right? That the coins are operating on a blockchain network, right? Dennis talked about this earlier, right? By definition, there's limited capacity, right? Limited transactions. And so one of the risks that you run if you want to be an active trader in currencies is essentially, I'm kind of oversimplifying here, but there are times that the capacity is shrunk down that you're just sort of waiting in line, right? You say, God, I want to buy or I want to sell, but there's so much activity that you're just going to wait in line to a point where sometimes your transaction just won't execute, right? Or there are, crypto banks and crypto exchanges that are saying, all right, if you want to get to the front of the line, you got to, basically pay, right? So that's just one of the additional sort of risks to keep in mind. And I know some folks who are very active in this space, they'll have 5, 6, 7, 8 different accounts at different banks and different exchanges open at different times to try to see, okay, where can I get my trade executed?
No question. So this is a fascinating slide, and I'll go straight to the bottom. These are values as of September 1st, 2021, when Natalie pulled it off of Yahoo Finance. So this trades around the clock, so you can't really, she would have gotten the currencies a couple different times, essentially, as she goes into each one to try to get the valuation. But Bitcoin right now, when you see that term market capitalization, if you wanted to corner the market on Bitcoin and basically take it over and you own every Bitcoin that's currently been mined, it would cost you $892 billion. Ethereum right now, 415 billion. So the top two, basically $1.3 trillion. So that concept of making something out of nothing, this part is fascinating right there. And so you can see that the top 10, these are the first 5. We'll have another slide with the next 5, but I want to stop at the third one. Cardano, if you at 91 billion, would you rather own all of that currency or the company Priceline? Price, which is now Booking Holdings, that's worth $93 billion right now. ADP, the payroll company, been around forever. It does payroll, HR related software. That's worth $88 billion. So I'm trying to put it into context as to what has happened here and how some of these have just gone up insane amounts in very short periods of time. Very fascinating. If you go to the next slide, we'll go down the list.
And before you do that, I just wanted to know, I know we had a question earlier about kind of the symbol or ticker, right? So this is kind of the most common, BTC for Bitcoin, and that's what we're kind of using for each of these here. Sorry.
Correct, but it's actually not trading on exchanges right now. So you can't go into any type of trading platform other than like a bank and actually see what they're listing it as. But if you go into Yahoo Finance or Google Finance or any of those platforms, you're not going to be able to put in that symbol. However, there currently are, and I'll get to this later on, like an ETF slide, there currently are a couple of trusts out there that trade specifically in Bitcoin and Ethereum. Number 7 now, Dennis brought this one up, Dogecoin. It actually started as, I believe, a joke in 2013. It is now valued at $37 billion. And so would you rather own all of Dogecoin or the Hershey companies? The Hershey companies is now worth $37 billion. And now to put it further into context, we're now going to show you the top 10 valuations on the next slide of US companies. And so Apple is currently worth $2.55 trillion. And if you look at the currencies versus the companies, Apple generates around $90 billion in profits right now. So Apple, expensive company now, trading at a relatively high price to earnings ratio, but it actually generates, as I said, $90 billion of profits. 90 billion.
90
Thank
billion. You. Yeah.
Microsoft generates $75 billion in profits. Again, you compare it to gold, doesn't really earn anything. It's just gold. And if you're looking at digital gold, the cryptocurrencies, doesn't earn anything. It is what it is. Again, the value can appreciate or depreciate, and we've seen the good side of it where everybody just focuses on the appreciation. People forget about, like, Dogecoin, I think, was up to over 70 cents, and I think now it's trading around 27 or 28 cents. So if somebody invested in it at that 70 cents level, in literally a month's time, that's dropped from that level to where it is today. And nobody knows exactly where it will go. I know the person that became that Dogecoin millionaire seems to think that he's going to hold it till his value gets to $10 million. But to me, that just shows you how illogical some of the people are when they're looking at it. And it could get to those levels, but if you look at what actually makes more sense, or trying to put it in more perspective, you look at these other companies and what they're worth, right? Tesla, again, expensive company, worth 740 billion. Berkshire Hathaway, the Warren Buffett company, worth $646 billion. So look at the valuations of the coins, compare it to companies that actually really do something. These weren't created out of nothing. They basically were created out of years and years of hard work, and they produce profits. And to like Dennis's point, where if somebody gave you a $20 bill, it's going to be worth $20 tomorrow, where you don't know what your currencies will be worth. And so, I'll give the example: if somebody sells their house and they're walking away with $500,000 of cash that they're looking to buy another home with, generally wouldn't be a great decision to put it into Bitcoin or Ethereum, right? I'm going to tell you 99.999% of the people will put it straight in the bank because it's money they know they're going to spend down the road, and they don't want to be speculative with it. The next slide goes over the trading ranges. And so this also is fascinating. I touched upon it a little bit on Dogecoin, where you can see on the bottom it got up to 74 cents. And in a very short period of time, and you can actually, this is I think off of Yahoo Finance, they've got a section on cryptocurrencies. You can go into it and you can get the history of the pricing on like any given day. So it's fascinating to look at. At times you could look at something and you say, oh, it's at the top end of the range. It makes you feel like it's only going to go up. But we gave the example of Bitcoin in 2017 and 2018, where it did reach that $19,000 level. People bought it at that level and held it all the way down to the $3,000 level. Some at times were forced because they might have needed the money. It might have been, down payment on a house, might have been, for a car purchase or home improvement, whatever it may be. That's the risk of the currencies. They will fluctuate. Right now, we're in a really good period where they've done very well. I would argue that some of it is probably related to the dollars that have come out in stimulus payments that just want to find a home. And what I mean by that, if the government sends out, $300 billion of stimulus payments, and some of it is going to people that don't need the money, I think that type of money is finding its way into the markets. Earlier in the year, you could have argued, or maybe in 2020, it was finding its way into the stock market. Today, it seems like it's getting back into the cryptocurrency markets.
Some percentage of it, right?
No question. Yeah. For some people, it's probably 100% because they get
Yeah.
checks they don't need, and they'll say, you know what, I'm going to buy a stock or buy crypto. And right now, the crypto is the hotter hand.
I just wanted to note one of the stable coins that Dennis had mentioned there, Tether in the middle. You'll see that its trading range is much tighter, right? You see the 52-week range was a high of $1.03 and a low of 99 cents, right? So that's kind of the idea, right? Is that it retains that kind of stable value. So Alp, a question for you. Do you see that most of the digital coins kind of trade in a tight correlation, that when one is up, they're all up, and one is down, they're all down?
That's a really good question. I think you might see some of the major ones trade fairly uniformly, and you could probably overlay it on charts. But I think when we talk now that there's 9,000 plus currencies and some of them come out of nowhere and go up substantially, I think they're completely uncorrelated with the rest of the market, and it really just becomes that meme trade. So they could gather momentum and they'll just outpace anything else out there. But the reverse is also true, as we saw with Dogecoin. Again, I'm not making a stance on where Dogecoin will go, but you saw what happened. It went vertical and it completely erased out, good month of those gains in a very short period of time.
Yeah, I do agree. I think when you look at the historical charts, at least, right, that kind of these top names pretty much all move together, right? When one is up, another is down.
So crypto banks and trading platforms. This is a really kind of new way of like new banks, right? So there's banks out there now that are crypto banks. Coinbase went public. Robinhood went public. Robinhood trades both securities as well as cryptocurrencies. Coinbase is basically just coin related for now. I personally opened up a Coinbase account to kind of understand what it was all about. I traded in it for a couple months, and personally, because I'm so involved with the market, I got a little bored with it, and it was during kind of a lull time in the crypto markets. But I was trading Ethereum and just having some fun with it and just kind of watching it and trying to understand the psychology behind it. Things you want to look at when it comes to a bank, that you basically want a platform that has the ability to trade a variety of coins. You also want one that has a lot of money invested in the security of it. You're probably aware that some of these banks have been hacked. I'm sure they've all tightened up their security substantially over the years, but that does not mean that whatever bank you go to won't get hacked in the future. Jason mentioned earlier, some people take their coins and put it in what's called, the term I've heard, it's a cold wallet. They take it off the internet, and so they'll actually have it held, whether it's in their house, in a safe deposit box, whatever it may be. In that way, nobody can get access to it. I think there's stories out there that somebody had a ridiculous amount of Bitcoin on a computer that I think the valuation of they thought was over 250 million. And the computer shut down, he lost the password, whatever it was, and nobody could figure out how to get into it. And I don't think they ever resolved that, but the value got to some outrageous number had he actually just remembered the password. But so when you're looking at this, again, you're trying to find, to me, a bank that has a wide platform allowing you to trade a variety of different currencies and the ability to adopt to new currencies very quickly. I'm sure they do their due diligence before adding new currencies. But to that earlier question where you have one that you couldn't, figure out how to sell, or it just, it was also illiquid. But anyway, so you're looking for a well-known brand name. I'm going to say this. My belief is many of the main banks right now, they'll probably go out of business, get downsized substantially, or be forced to merge with the other banks, because as more of the major platforms add crypto, such as Schwab and Fidelity, Vanguard, etc. So if they start adding crypto and you've already got your stock account, I'm confident that I personally will shut down my Coinbase account. So I think that's going to happen with a lot of people. So if they can add it onto a regular stock platform and they're going to look at it as part of their portfolio, they're not going to want to have money at Coinbase. And I'm not knocking Coinbase, but I personally won't want to have money at Coinbase as well as where I have my assets invested right now.
Yeah, you'll kind of note to the earlier comment, traditional finance has been kind of late to the game. You'll sort of note that, the traditional names, Schwab, Fidelity, for example, are kind of down there at the bottom saying, oh, they're trying to get into the game. All right.
You're seeing it with everybody now. Morgan Stanley, Goldman Sachs. I think they're all behind the scenes working on how to add this to their platforms, because they're getting asked to at least have an offering from investors that are on their platforms.
And this is not meant to be a complete list of crypto banks, trading platforms. It's just a sampling. We're not endorsing any of them in particular.
Sure. And again, my thoughts try to go to some of the more established names, because likely you're going to be trading the main currencies, and I think that gives you a little bit more security. So Bitcoin ETFs, on the subject of, what are the symbols? And so currently, this is kind of surprising. There are no ETFs out there to buy cryptocurrencies. There's something called GBDC, which is Grayscale Bitcoin Trust, and they have the equivalent for Ethereum, Grayscale Ethereum Trust. So they're out there right now. I believe they have filed papers to turn into exchange-traded funds. And the main reason is once it gets to ETFs, there are going to be much lower fees there. And that's also something that we did, I think Jason mentioned earlier on the banks. You want to make sure that you find a bank that has reasonable fees. Our belief is all those fees are going to come down dramatically as we see more widespread adoption, more competition. But on the subject of ETFs, what is going to be happening in the future, you can see somebody has already filed with the SEC, but you're going to get something that you can literally trade on the stock market, and it will hold, like you'll see one that's just nothing but Bitcoin, and it's going to have very low fees associated with it, where the Grayscale one right now, I believe, is up around 2-something% of annual fees just for all the work they're doing within that trust to maintain, the Bitcoin or Ethereum, et cetera. So I think there's a lot of choices here coming up in the short term.
Is it safe to say that in addition to sort of coin-specific ETFs, there will be an ETF that is a basket of coins?
Absolutely. I think we'll end up seeing a lot of money put into this very shortly, right? I think in the next 6 months to a year, you'll see a lot of rollouts.
So just kind of thinking about we're getting close to the end here, and just kind of wrapping up on kind of the investment discussion piece of this, right? So in addition to buying coins directly, right? You just want to buy and hold a Bitcoin, right? That's one way of kind of getting in the game, if you will, right? If you want to invest in crypto, you can just buy and hold a coin. Bitcoin obviously being the biggest name one. You can buy and hold, Ethereum, which has a coin, or you could also look at, okay, I want to sort of invest in the network piece of it, more of the technology side of things, right? NFTs, non-fungible tokens, is one way to do that. Another way to kind of get exposure, if you will, to the space is what Alp just talked about, right? The trusts that are there that are kind of expensive right now, but they do exist. But the ETFs, once they come out, right, that'll be a space. Or some of those banks that were on the previous slide have gone public. So that is another way to potentially get exposure to the space. Like, just one example, again, no endorsement of it, is Coinbase, right? They had an IPO not too long ago. Right? So those are some of the different ways that folks who say, like, hey, I want to get in the game. I want to have some exposure to crypto. Those are some of the different ways to go about doing it. So just kind of wrapping it up here on, one, sort of just regulations, right? So this is a rapidly evolving area. We talked about it a little bit earlier, right? This is a potential risk, right, to investing in crypto in different forms, to determine, okay, what are the regulations gonna be? Not unusual, right? Sort of regulation is slow to the game. They're playing catch up, right? So still a lot to be determined here. You think about the U.S., there's just a number of different agencies and entities that have a finger in it, right? And say, hey, we want to be the primary regulator, right? So that there's just a lot of oversight that's in play. So we're happy to talk more offline, than on that. But also,
I think it's safe to say that when the regulations come in, it will not surprise me if they make a stance on some of the kind of complete, I'll call it BS currencies that have very little validity to them, that they're going to put some type of standard on it, and you could see them just get shut down.
Yeah.
So, that's the risk of it.
And one kind of specific area, right, that's tricky is you can imagine, like, okay, if you bought an NFT and then let's say that NFT generates income of some form, right? Like it gets rented out and people pay to be able to have it on their digital frame, right? A piece of digital artwork, right? So there's a fee, and there's revenue that comes from that. And then sort of the ownership of that gets resold, right? So a group of investors come together to be, right? So that's the sort of thing that the regulators are trying to figure out, like, okay, so what category of regulation does this fall under, and so forth.
And to some degree, I know we talked about this offline, Jason and Dennis, but the NFT business, maybe the acronym is new, but we've had things that have actually sold digital for years and years. I mean, think of movies, TV shows,
music rights,
right? Music rights. Like, in theory, all that's been digitized right now, and people have paid hundreds of millions of dollars to buy the old Seinfeld reruns, the old Friends reruns, old movies, right? So that's now today all like in a digital format. So, sure, there's the film of it somewhere, but as you know, today they don't even film that same way. So we've already been dealing with that. So that's why I actually look at this and say the NFT part of it, that's actually more easy to understand than the cryptocurrency part.
Yeah. And now, of course, while there is a lot of conflicting content and information out there, even directly from the IRS on the subject, just to be clear, you are required to report gains, right, or losses, right, to kind of net that out, right, keep track of it on your transactions, because, right, if you have gains, you're supposed to pay tax on them, right? Just plain and simple. Now, some of those crypto exchanges or banks will issue 1099Ks, which is the one specific to crypto. Some don't. There's sort of a threshold dollar amount where some will actually email you a 1099. Others, it's totally up to you that you need to keep track of your transactions and summarize it. This past year, I'm sure many of you saw, if you did your own taxes on TurboTax, one of, if not the first questions on there was, did you trade in any crypto? But recognizing that this is evolving. One recent thing that I learned about is there's a proposal out there to sort of make an equivalent sort of de minimis rule. So if you think about like for traditional currencies, so let's just say you exchanged money to go on vacation, right, to euros. And then by the time you came back and exchanged back, the exchange rate was in your favor and you made some money on the exchange. Well, there's a formal rule that says, hey, if that exchange you profited under a certain de minimis amount of money, don't worry about it. The IRS says you don't need to report it. There's a proposal out there to say, hey, let's institute a de minimis rule. This doesn't exist yet, but just sort of pointing out that there's a lot of different things to happen. But the important thing is just, hey, you're supposed to report it. So what's next, right? What more could we say? There's so many different things that could happen here, right? Like again, I'll go back to my earlier point when it comes to sort of the currency side of things itself, right? Sort of the digital gold of just buy and hold. And Al talked about, hey, building this into a portfolio. That hey, there are a lot of smart people out there who believe, yep, maybe the time is already it should be a part of a portfolio. I think that's a little bit still fringe, if you will, saying that it's should be in a portfolio now, but it's building up some momentum. There's some steam to say, hey, you want to build out a small portion. Alp sort of used it. Hey, if somebody is committed to it, even if you're committed to it, probably under 5% of your portfolio, maybe even less, right? Yeah. Then there's the technology side of the whole equation, right? And we touched on sort of the Ethereum world as the kind of the primary example, right? And non-fungible tokens, the NFTs, right? So there's just it's fascinating. We talk about this a lot, just sort of how many different ways that we can't even imagine that this could play out going forward.
And I think in a few of the articles we read, I think this was in the Morgan Stanley one, they basically said, using an old baseball analogy, we're in the first inning here. And so for those that don't know baseball, there's 9 innings in a game. So they're saying this is in its infancy. And the obvious is like, we still don't really have regulations on this at all. So, we know all that's coming.
While all of this seems exciting and seems to be dominating all of the news, with just a little bit of context here, right? So, for example, like credit card transactions, and correct me if I'm wrong, Dennis, I think this might just be specific to Visa credit card transactions, not even all, MasterCard, American Express, etc.
Yep, that's right.
In a day, it's conducting over 150 million transactions, whereas Bitcoin transactions. Now, this is both just buying and selling of the currency itself, the coin itself, or using the currency to buy something with, right? So any kind of transaction related to Bitcoin on a day is about 400,000. So just a little context, right? This is still early days to Alp's point, right? It's still that there's a lot of adoption rate still to come along. And so, Alp, Dennis, any other closing thoughts before we wrap up? I know we're a couple minutes over.
Dennis, you had one question you wanted to answer, I thought?
Yeah. There was one other question. So somebody asked, what about Backed, which is, and I was just doing some internet searching here, but it's another trading platform. Yep. Can't speak for it specifically. I see that it's backed by the New York Stock Exchange owners, and they're working with Starbucks and Microsoft and a couple of the regulatory, government regulatory
entities.
Entities. So it looks like it could be good. I can't endorse it or say that it is, but it looks to be legitimate for the most part.
And I'll go back to, like, I'll say in closing, right, what we talked about in the beginning, that this year in May, when we got our E&O insurance, errors and emissions insurance renewal, they specifically carved this out. And that, again, it shows you how nobody knows how to handle this right now. And I wanted to end with that. I know Jason already said that, but that's why at times we can't be really specific on anything at this point. We're just talking in generalities. And we know for the most part, a lot of people that we saw, who the people that signed in, we know a bunch of them, and they basically wanted to just learn more about it.
Yep. So, well, I know we're on the hour or a little past, so thank you everyone for joining us. Just again, feel free to reach out to us if you have additional questions or like to schedule a time to connect. We will be sending out the recording here in the next day or two, tomorrow or probably early next. Well, shoot, Monday's the holiday, huh? So it might be Tuesday. But please don't hesitate to reach out with any questions, comments, feedback. Always appreciate feedback. So we will leave it at that. Take care, everyone.
One last comment.
Yeah.
For those that are looking at the AFS team, this is the AFS financial group side, not the AFS 401k side. So some of you have joined us from the AFS 401k side. That's our sister entity led by Alex Astley. So this is just our team here. So
that's why you don't see everybody else. All right. Thanks. Take care, everyone.
See you. Enjoy the weekend.